Wednesday, April 10th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about a simple law of economics, supply and demand, and what it's got to do with our current fiat currency system, and how the powers that be have been able to keep it going for so long. I'll talk about the mechanism that they use that I think people need to understand. And I'll also look quickly at this little book that I have, a pocket book of gold by Jim Sinclair and Peter Carlin. A few of the quotes they make about gold and precious metals in general. Before that, of course, I'll look at what the markets are doing this morning. It's about 10 to 8 a.m. London. Yesterday, of course, the stock markets continue to move lower. The Dow lost 190 points, about 0.75%. S&P dropped 18 points, about 2/3%, and the NASDAQ composite dropped 45 points, or just over 0.5%. So it wasn't a great day. We saw precious metals rally yesterday a little bit. We're back above 1,300 in gold, and we've stayed above 1,300 overnight. Right now we're at 1304.30, up 30 cents. Range has been 1305.50 to 1301. I just wanted to quickly show you this chart here and this formation. It's called a falling wedge. This is what it looks to me in the gold price technical picture here. So what is a falling wedge formation? Well, it's a formation, a temporary pause in an upward trend. And as you can see, since August last year, when we bought them at 1160, we've had an upward trend in gold. And I think this could be a pause. How long more could we stay in this falling wedge is anyone's guess, but we are close to the top of the wedge there, which right now today would be around 13.15, I would say, but it gets lower as time goes by. So that's what I wanted to show you there. Of course, technical analysis is not always perfect, but it's looking to me like a falling wedge. Earlier last week, it looked more like we were forming a head and shoulder top in gold, but right now it's changing. So the picture's changing there. Silver, we were at 15.22, up 2 cents this morning. Silver is still lagging a little bit behind gold. We need to see silver do well. Because we know silver should lead the way in the big move in precious metals. Range has been 15.14 to 15.27. Stock markets, while the Dow is up 18, 26,177. The S&P is up just under 3 points at 28.81, and the NASDAQ 100 future is up 6 points. So I saw yesterday there's a lot of talk about a trade war developing now between the United States and the EU. People were giving that as a reason for the markets coming off. Yeah, people always try to find reasons. I try to look more at the cycles. I think the bull market is long in the tooth anyway. And if you look at the chart of the Dow here again, this looks like a massive top we're forming here. I know my head and shoulders hasn't started yet. It might be delayed, the right hand shoulder. But what about S&P? Same here. Some people are talking about a rising wedge, which is the opposite of a falling wedge that we have in gold. And that we could see a break of this falling wedge, and we're quite near the support line in this rising wedge, excuse me, in the S&P. This is a weekly chart. What about the currencies? Well, we got the pound up 0.16% at 130.73. Euro is 112.71. Up nominally, up marginally, only 10 pips. The dollar is actually unchanged against the yen, 111.13, and unchanged against the Chinese yuan at 671.80. Crude oil, WTI holding above 64.15, up 0.2%. Brent is at 70.54. The bond markets, the bond markets is fairly steady recently, but we're just below 2.5% in the 10-year yield. We're at 2.49. The 3-month is still 2.44. 7-year is at 2.39. So it's inverted there by 5 basis points. What about the law of supply and demand? I mean, it's a simple law of economics and human action and transaction, I would say. It's very simple. I mean, if you've got two things that you're exchanging for each other, let's say apples and bananas, and you've got 10 apples and 10 bananas, the exchange rate, you know, people exchanging bananas and apples, it's going to be probably 1-to-1, but you increase the number of apples to 500, bananas are going to be more in demand. Apples are going to be like, there's too many of them. So that's what the law of supply and demand does. It looks at people's desire for a commodity or a service, and relative to others, it's like a ratio. So when something's supply goes up and something on the other side of that exchange doesn't go up, the supply of that thing that doesn't go up in supply will be, its relative value compared to the other thing will be higher. So that's how, and that's the same thing with money. And a lot of people, especially the Keynesian economists, they've kind of corrupted that law in terms of the money, in my opinion, because they look at money as something that is special, but money is just like the most marketable commodity, as the Austrian school would say. And what is the most marketable commodity? Well, it's something that has value that you will be able to exchange for anything else. So it facilitates indirect exchange. It eliminates the need for bartering, which makes specialization and easy transactions difficult. And it's what, indirect exchange is what's made possible the development, advancement in the modern economy. But yeah, and historically, the most marketable commodities have been gold and silver. Silver especially. Silver has been even more used as money, as a most marketable commodity for thousands of years. If you look at different languages, the name for money is silver, like plata in Spanish, in French, argent. And even in England, we call it sterling. The currency we have comes from sterling silver. But gold as well. Gold has been for, I would say, more of a storage of wealth and more for exchanging goods that are high value goods, I would say. So what has been done is that government has hijacked the mechanism in which the market determines what money is, and they've have they hijacked? Well, they've banned people from using whatever most marketable commodity they wish to use, and they forced through legal tender laws people to use paper money. which used to be, you know, currency used to be just a receipt for commodity money, but now they've taken away people's right to get their money with their receipt. A good example would be if you went to a restaurant and you left your coat in the cloakroom, they gave you a ticket, and then you left, you had your meal, you came out of the restaurant to the cloakroom and you gave your ticket, and you expect to get your coat back because it's cold outside. But they say, oh, I'm sorry, we're just going to give you another ticket. We don't give coats anymore. And that's what they've done with the monetary system. And what about the law of supply and demand with the monetary system? Well, they've issued thousands and thousands of coat tokens. And even though there's maybe 10 or 15 coats, but they've managed to keep people's perception that those tokens, those coat tokens, are valuable. And how have they done that? Well, because they've forced people to use those tokens through legal tender laws. They force people to pay their taxes through that, and that's why they have to impose taxes. That's why tax is so important for this system. It's no wonder that when they created the central bank, the Federal Reserve System in 1913, they reactivated the Inland Revenue as well, the IRS, because you need a tax system, strong and draconian tax system. So how come the value of the money has held so well in spite of the fact that they've created so many of these tokens? Well, historically it hasn't, because if we go back to 1913, with $1 you could get 120.67th of an ounce of gold, and now with $1 you can only get 1,300th of an ounce of gold. So it is losing value over time. But what about in the last 10 years? We know there's been massive issuance of this paper money through QE, through zero interest rates, through negative interest rates, and even in the US, the real interest rate has been really negative, because if you take the debasement of the currency, if you want to call it the inflation rate, minus the interest rate, real interest rates are negative. So how have they managed to make sure that people in general have confidence in this paper script or this fiat currency, which they have been issuing in great amounts for, you know, since 1971, I would say, when the gold anchor was pulled from the system, when Nixon closed the gold window. I mean, we've gone from $1 trillion in debt in around 1981, national debt in the US, to 22 trillion today. Well, I think it's because they've been doing everything they can to point that new created money towards financial assets, to keep financial assets high. And that's why it's kept the 1% very wealthy and the people near to the 1% very wealthy, because it's elevated financial asset values. And that's how they've been able to keep this thing going. What's been the consequence of that? Well, it's been all the talk about wealth inequality that we have now in this system. And I spoke about Ray Dalio yesterday, and I saw that David Stockman said the same thing I said. It's the Fed, you stupid. He called Ray Dalio kind of stupid. You have to look at all the money that's been created. So, yeah. So what's the best protection against that? Well, it's precious metals, gold and silver. I think, you know, if you look at the very wealthy people, I think Jim Rickard spoke about that. They have very little cash in the bank. It's all in real assets, be it precious metals, be it land, fine wines, whatever, antiques. Yeah, they probably have a lot of cash in the bank relative to us, but it's a very small fraction of their wealth. So that's what I wanted to talk about today. And quickly I'll go through the pocketbook of gold here. Just a few things about gold. Not the whole. It's chapter 5, Aphorisms of Gold, Meditations and Principles for the Gold Buyer. So I'll go through a few of them. So gold is currency. Gold is competition for paper currency. Of course, we know that. Gold is not a commodity. Well, I would say it's a monetary commodity. What they mean, it's not like a normal commodity like wheat or corn that we consume. So I kind of agree with that. Gold is a barometer of fear in the financial system. Yeah. Gold is a barometer of confidence in government. Gold is insurance. If investment is your goal, then look at gold as insurance. Gold is insurance against governments gone mad. So I'll stop at that. I totally agree with that. Gold is insurance against governments gone mad, and that's why you need to have it. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.